Hey there, Vinny from Project Frugal. It's that time of the year again when we have to pay our insurance. And as much as I like giving companies my money, we're going to have to do a bit of analysis to make sure we're not losing money. So let's check it out. Every man or woman's home, in this case, is their castle. Maybe these aren't great examples of castles, but however, fortunately my castle is a bit better than that. We're going to have to insure it just in case the worst happens. There's an earthquake, there's a big fire. We've got to make sure that we're covered just in case so we can rebuild if we need to. So we're going to check out a few options, a few different companies, see what's available on the market, see where we can save some money, ideally, and yeah, we'll see what happens. So the first thing we've done, we've gone onto multiple websites, we've done plenty of analysis and research, we've checked out all the insurance options available in New Zealand, we've narrowed them down to a spreadsheet. Let's go and check that out. Here we go, here's our options. So there's 5 companies that we came up with. Tower, Initio, I think it's pronounced, I'm not exactly sure, Initio maybe, AMP, AA, who we're currently with, and TradeMe. Now the reason we're doing this, we pay annually. If you pay annually, you will save some money rather than paying fortnightly or monthly. So it's highly recommended that you pay annually rather than the other options. Now that we've had our bill, AA Insurance has unfortunately decided it's going up by 29.4% this year. So just about a third. That's way too much for the cover that they provide. And for house and contents insurance, last year we paid just under $2,000. This is not including any car insurance, which we have third party on. Our car is cheap. It's a $3,000 car. We don't really care about replacing it. If it dies, it dies. If it gets stolen, it gets stolen. However, we are concerned about home and contents insurance. So based on home and contents insurance, last year it was just under $2,000. Based on the house sum insured of just under $600,000. According to homes.co.nz, this house is currently worth $600,000, roughly speaking. And we also had a content sum insured of $95,000, almost $100,000 for all our clothes, drawers, beds, computers, whatever else, lights, cameras, etc., etc. Food, maybe? Fridges, freezers? Well, there's a lot of things to consider. And we also had some excesses on that. So for the house, we had $1,000 excess, and for the contents, $1,000 excess. But almost $2,700 is the new bill. Yes, I think that isn't. Yes, that's including the car as well. We're not going to worry about the car at this stage. That was done at a different time in the year, so it's not that much of a concern. We've still got cover for that at the moment. The thing I did is I got some rough quotes from each of these based on roughly the last equivalent amount. According to the amount, $760,000 supposedly is how much it would cost to replace this house. I don't believe that's quite the case. We'll find out a little bit more later. But we're going with that, get some rough quotes to see what the different companies are providing within the marketplace and how much we're looking at having to fork out. So if we just go down the list here from top to bottom, pretty much the first one we looked at was Tower. It's going to cost roughly just over $3,000 for that one. Initio, I don't know what it's called, $3,500, $3,600. The most expensive one of the lot. Do they provide any extra benefits, bells and whistles? I've got no idea. We're not going with that one. It's way too expensive. AMP was next. That's the one we're actually going to go with. They provided the cheapest quote, just over $2,200. That's including the car as well. And the contents is included with the house insurance as part of this particular quote, as we've got some notes over here. AA, our current provider, like I said, 29.4% going up. No way, I'm not paying that. And last of the list here, TradeMe. There may be some other options. Vero Insurance, I know maybe they kind of like do a broker deal where they get some of these other companies, maybe compare deals, all that sort of stuff. We're not going with them. We're going with the easiest ones that we could get quotes online for within reason in New Zealand. Not all the companies are covered here because we live in Wellington, or the Wellington region at least, and not all the companies provide an instant quote you can get online, so any ones that didn't, we just ignored pretty much. And after going through all of these, well, it's pretty obvious that AMP appears to be the cheapest at the moment. We have no loyalty to any particular brand. At the end of the day, they're insurance companies, they're in it for a profit, they're out to make money, that's what they do. They give you insurance, hopefully nothing goes wrong, but you pay for the privilege. Now that we've established that AMP is the cheapest insurance provider in our circumstances, let's sign up and see what sort of deal we can maybe trim back even more. So first of all, we'll click on insurance. We're going to go for home. Well, we're actually going to click on quote. Get a quote. What do we want? We want house. We want everyday. That sounds better than comprehensive. Comprehensive sounds more comprehensive and also more expensive. We don't care. If the house burns down, we just want to get some money so we can rebuild the house. We want to start it today being the 23rd of October. We own the house. We're permanent residents. We want home and contents. And we'll put some details in here. It's a freestanding home. It's on piles. It is a weatherboard house. It has an iron roof that I love to get up on and fix, apparently. Well, I probably will be this summer anyway. So we'll click on that. It was made in 1970, so that means it's roughly about 52, 53 years old, something like that. Pretty old, about as old as me. Do we have home security? We've got a burglar alarm. We've got key-operated locks or security screens fitted to all accessible windows. We don't have any other deadbolts in terms of those things. Continue. It's on a moderate section slope. It is standard quality. Pity they didn't have less than standard quality. However, we'll go with standard quality. That's certainly not top of the range, this castle, I tell you. It's a single level house. Has roughly 4 bedrooms. Small to average bedrooms, unfortunately. Only 1 bathroom. There's only 1 dwelling. There's only 1 covered car space. And any of this stuff, well, it has a balcony, deck, veranda. Well, yeah, pretty small deck, to be honest. A couple of small decks. Don't have a tennis court. What a shame. Or a granny flat. That'd be nice. Estimated rebuild cost. Let's click on that. Well, there we go. They've estimated the rebuild cost is $911,000. Considering Homes Co. NZ says this house is worth $600,000, we're not going to go with that. We've got 205 square meters here. We're going to drop that down. We're going to change that to 131. That's the actual size. Let's click on re-estimate rebuild cost. And all of a sudden, that's now dropped down to $640,570. You can adjust the above amount to set your sum insured. It must be at least $577,000. We'll go with $577,000. That's close enough to $600,000. If the house burns down, we've still got the land. And will $577,000 cover removing all the rubbish, rebuilding the house, and going again? I think it will. Chuck that number in. Let's click on continue. Now we're off onto the content section. I've already read through this, so we're just going to skim through this. We're not going for $95,000 worth of contents. We're going for $60,000. I think that's more than enough for what we'll need. We don't have any extra special items. Let's click on continue again. Right, and we want to pay annually on that. So that looks like our total for everything, $1,661.67. Let's just go and have another look, just double check this stuff. Actually, we've got the option here to increase the excess. Let's go and have a look. The standard home excess, if we up this from 500 to 5,000, how much do we save? Well, we're saving quite a bit. We've gone from $1661.67 to $1514, about $160. Really, $160 to save that. Really, all we care about, does the house burn down? If it's going to cost us $5,000 in excess, not a big deal in that scenario. So for the sake of saving $4,500 versus $150 extra insurance premium, I think we'll go with $5,000 excess. Let's have a look at the contents, see how much we can save if we up the contents. Again, same scenario. If someone burgles the house, that's a pain. But if the house burns down and we lose everything, and we have to buy clothes, food, and fridges, freezers, beds, all that sort of stuff, that adds up pretty quickly. So we probably have to have it. Yeah, actually the $750 looks good to me. I think we're gonna get this under $1,500 for home and contents insurance for $577,000 worth of replacement, 60,000 contents. You might say that's a bit low. That's all we need. We're not looking to reinvent the wheel. We're not rebuilding a mansion in this scenario. We just want to get something decent that's going to cover us for most of our requirements. This will do the trick. And there we have it. Your home and contents are now insured. Rah-de-rah-de-rah. it's insured as of today. Under $1,500, pretty happy with that. Now just to recap, a few tips for getting insurance. Make sure you shop around. Don't be afraid to spend a couple of hours looking at all the options, get some quotes, get any quotes that you can, and then go with your gut instinct, especially when it comes to price. That's a big one in our book. If you can pay annually, definitely do that because you will save quite a bit, probably 10 to 20% in most cases. Yes, it is a big lump sum that you have to pay all at once. However, you do actually save money. It's a big financial outlay every October, November for us when our insurance expires. However, by paying annually, we're saving at least a couple of $100 every time we have to do the insurance. I'd rather spend that $200 on something else, like maybe some food or something else. Don't forget to read all the small print. There's plenty of small print in some of these documents, these policy documents, bells and whistles everywhere, left, right and centre. How many of them do you actually need? Well, it's all up to you. The more research you do, the better informed you are, the better deal that you'll get for yourself and your circumstances. Instead of paying $2,600, close to $2,700, we've managed to get this under $1,500. Okay, so the terms aren't quite as good as maybe they would have been, but I'm happy with that. We're saving $1,200 on what we could have been paying. If I'd put my head in the sand, that's what we would have been paying. And there we have it, so that's what we're going with. We're saving plenty of money, definitely on this one. There is a little bit more risk involved, but I'm pretty happy with that decision that we've made. So thanks for sticking around, hope you enjoyed this, hit the like button, all that sort of stuff, and we'll catch you in the next video. See you later.